Hi, hello, and welcome to this live by Paris and Dubai Trading Academy. So today we're gonna be scalping the Nasdaq and the S&P. So yeah, that's what we're gonna do today. So also today I'm gonna talk a bit about the economic context as well as the inflation and everything that's going. That's every topic that we can talk about in the economy. So if we look at the market today, is European or Asian, and both went up quite a lot. You can see it. Wait, it's there. That we don't care. You can see it there. You can see we have CAC 40 at CAC 40 at plus 85%, FTSE at plus 40, DAX plus 80, Nikkei closed at 150, Hang Seng 260, so that's like quite a big move upward. Euro stocks is at plus 0.90%, plus 90 basis points. So Europe has been pretty high. As well, if we look at steel, we can see that short-term interest rate have been short-term interest rate yield have been higher, while all the bonds one have been declining. So this is showing us that so that would be like mostly to say it bullish signal. Otherwise, yesterday we had a pretty big day with the CPI that was like a pretty big increase. That was like a positive, higher than expected. That was lower than expected, which was like more, how to say it, bullish signal. And here we have the open. We can see like it's a big of a mess on Nasdaq and S&P. So far we're gonna like just let it stabilize a bit. Also on economic news, we had today we had the Chinese export that have been 12% that have had a 12% decreased. As always, Atas is bugging when I'm on live. Nice. It's like I think it's affiliate. So yeah, we're gonna like restart it. And in the meantime, let's say we can see that the English GDP has decreased less than what expected, but it's still at decrease. You can see it here. We were expecting 3%. It's been 0.1. So it's like better than expected, but it's still a decrease. So it means that the British economy is slowing down. We can see French CPI monthly French CPI is at 0.2. So if yearly that would make if it was the same all year, it would be 0.2. 2.2 inflation, 2.2% inflation, which would be close to the goal, but we know that currently the goal is so yeah, why the Flucatas is doing that. That also, if we look yesterday, we had the Fed beige book, where basically what they said, like the beige book is the Fed outlook on economic policy. So what they said was that the economic activity was having a slight increase. The labor market also improved, and the price was slowing their precedent increase. So that would be like quite a good. So that's actually quite a good thing, considering today we have like high inflation, and that's why the Fed is increasing their interest rate. which would be like quite how to say it, which is like why the inflation is slowly decreasing, either in the US and as well in Europe, because the central bank are slowing their are like having like a hawkish policies in order to force the decrease of the inflation. Still not working. Ah, okay, so now it's working. Okay, so we see at the open we're going up. So that was basically what I expected. I had a scenario that I would buy it here and go somewhere over here. But since it was the open, I let the market like stabilize to figure out which move, like in which direction it was moving. We can see also on the S&P and also on the Nasdaq, even though it's still. Even on the Nasdaq as well, we can see normally, if I'm not mistaken, we have a pretty big seller somewhere around here, but it doesn't appear here for now because it's too far from the current price for us for it to show it to us, because otherwise, like it takes too much memory. So now we're looking, yeah. So we see the market is clearly and it's correcting on the S&P, not yet on the Nasdaq. So yeah. Also, if we look, we have the USD, which is declining, and the euro, which is like at the euro USD is at its highest since something like 16 months. So that's like quite a lot. There are several reasons for that. Like there's the announcement made by the BRICS, so Brazil, Russia, India, China, and South Africa, to create international money backed by gold. And the USD is not backed by gold since Bretton Woods in I think 73, when basically they decided to, in order to avoid bankruptcies, they decided to remove the US, like the dollar backing by gold. Because basically people were doing arbitrage between the price of gold and the US dollar, because gold was actually more expensive than what was the backing of the US dollar. So basically what they would do is that they would buy US dollar, convert them to gold, and then transfer, like, and then change sell this gold and use the money to buy more dollar, convert them to gold, then sell the gold, and they would make like a seemingly riskless profit. And that almost bankrupted the US in the 70s, and in order to avoid that, they decided to decorrelate the gold and the dollar. Since then, so the consequence of that is that they've been able to print as many dollars as they want without any limitation, and hence destroying the strength of the dollar as an international trading currency, because since it was not correlated to gold, basically the US would have all the power, and that would be a bad thing for international trade. This is also why they are not exporting their petrol but buying it, because for them it's free. Like they have the money print, like they can print basically the money they use to buy gold, to buy oil. So oil is mostly free for them. So yeah, like I said yesterday, we had like the core CPI. It was like way better than expected. Like it was better than expected. So you see, we were expecting 3.1, we've got 3. Same way, the CPI on a monthly to month basis was at 20 basis points, and the core CPI as well. And we were expecting like it to be was like higher than that. The target for both is somewhere around 2%. So that means that we are not still at the at the Fed's at the central bank goal, which is a sign that basically they're gonna continue to hike their interest rate. So yeah, basically that's that. Also, yeah, the GB, and we've got the PPI and the jobless claim today, and at 2:30 European time, and we can see that basically, no, that's yesterday. Today, the PPI is wasn't expected, but that's a good sign because it's purchasing price index. So basically, it's the price company use to purchase commodities, but like yeah, what they are using to produce goods. So it's also a sign of inflation because, as you can expect, like company will report those price to the consumer. It's going to be in the end the consumer who's going to pay those prices. So if it's lower than if the increase is lower than expected, it means that inflation is slowly going down. And jobless claim, like it shows us that we still have a pretty strong, that the US still have a pretty strong labor market where basically they have like better numbers than expected every time for I think the last months, like the last 3 months. So it shows that even though there's inflation, high interest rate, that should normally slow down the economy, the economic outlook is still looking pretty good. So now the question that basically every analyst is asking themselves is, will the US and the central bank, like and the Fed, will manage to have a soft landing on this inflation kind of crisis? And what by that they mean like, will they be able to solve the inflation without causing a recession and a market crash? They're not that like they are highly, they hope to do that, but historically it has never happened before. We can see we have one seller here pretty strong, yeah, looking at that, another one like kind of everywhere, and 43, we should soon see one. I think is gonna be here. So yeah, that's about it. Otherwise, if we look in the what is the trend for the S&P as well as the Nasdaq, we can clearly see since the beginning of since August last year, we've been on an upward trend. I think yeah, it's August. Yeah, it's August last year. We've been on an upward trend. So it's a pretty good sign. It's a pretty good information as well. So for today. Like I said, we had long at 1560, but it went without us because yeah, it went back to it at the open, but it then flew up, and we didn't took it at that time because it was, like I said, the open and the direction wasn't necessarily clear and constructed. On top of that, you can see first candle was like a really downward one. So that could mean that the market would go down in the beginning. Our other plan was, in case the market go down somewhere here, to buy it back then, to buy it back there to go in order to go try and reach this one. Apparently we're gonna reach this line here, like this level here, before a potential return. On top of that, we can see we're already at plus 1% on the Nasdaq. We know that most of the daily return for the S&P and the Nasdaq are comprised between 1.2 and minus 1.2%. So if we reach like somewhere here, we would probably take a short. Now we can see that the market seems to like be almost turning around. We're like still on the way down, but we're still like but only in like a very short-term orientation, so we would rather take it like later. Salut Priscilla. Hello Priscilla. Yeah, today is Thursday, so Thursday are live in English, Friday live in French. Not tomorrow because tomorrow is a French national holiday. So we are not gonna. I'm not gonna be working tomorrow because, like I said, it's a national holiday, and I don't work on national holiday, even though US market will be open, I have other plan for my day. Also, since I'm here, let's talk about there's some news about Paris Academy. We're actually moving from our office to a new bigger office, still in La Défense area, and actually on the other side of the Les Quatre Temps, which is a big shopping mall, and on the other side of the Esplanade of La Défense. And so we will have this new office open once the construction work we need to do inside are gonna be over. So, and we might, I'm not sure about this yet, but normally there should be some kind of inauguration party with some of our partners from different profession, company. So yeah, we can see we have some pretty big sellers on the S&P, on the Nasdaq they're more spread out. But yeah, we don't see the big one I saw earlier. I think it was somewhere higher, so we're gonna see. We said anyway, we're not gonna take any trade before the market settles. Probably if we reach this level, we might take another short around there. But otherwise, today we mostly want to work in with long trade. It's still not necessarily definitive. We are still gonna take observe the market and try to see what's happening, because if the market wanna continue to go up, it should go up. We're not gonna short the market going up, because this is the best way to actually lose money, to short a market going up or to buy a market going down. So yeah, so once again we're trying to look at the order book. We can see on my current setup, you can only see I have three at a screen. I have my main one with here, where I have the S&P in 1 minute, 5 minutes, and the order book, and the same for the Nasdaq. And then on the side I have this one, where I have the 30 minutes, 4 hour, and the and the smart tape, which show me all the market, the order that arrive in the market as market order. And I have the same thing for the Nasdaq, where I can see, I said, every order that comes in the market, as well as their proportion. Is it mostly buy order, sell order, and which trends. When we look at the smart tape now on the S&P, we can see some pretty big order block that are quite hidden. We can see at the big, I'm gonna show it to you so you can see. Here we have at 18, we have at 48, we have one big buyer here, another one here. So no big sell order that would match those amounts. So like I said, we're still waiting to see where the market stabilize and everything, because on top of that we had previously a pretty high raise since the beginning of the week. We had basically we started the week at 15 more or less at 15,100 points, and we're now at we had a 500 points increase since the beginning of the week. So we're still we have a pretty high we had a pretty high increase, so we might we're still expecting a market correction pretty soon, either today or in the following either today or soon. Yeah, also on top of that, on my setup, I have a CNBC. I can't show it to you because I don't have the right to do it legally. But basically, they pointed out that the VIX, which is the implied volatility index of S&P 500, that is around getting around 12%, around 12, which is like actually the median, the average of the VIX, the historical average of the VIX. Because basically the VIX is mean reverting, so it means it's returning to its mean, and its mean is between 12 and 13. So while as long as the VIX is in this area, we can expect it to we can expect the market to continue being evolving normally. But the VIX, like if the VIX would increase mostly in case of big like it would spike during during crisis basically. And when hence, because the VIX is basically calculated using inverting Black-Scholes formula. So Black-Scholes formula is a formula that allows you gives you the price of an option, the fair price of an option, using different factors like the strike, the strike of the option, the price of the underlying, the risk-free rate, the time to maturity, as well as the volatility. Since we've got basically all four information, we've got the price, we know the price of the option, the strike and the strike, the spot, the risk-free rate, as well as the time. We can estimate we can make an estimation of the volatility for the S&P, the implied volatility, like the volatility implied by the price of the option, and this is how they calculate the VIX. Historically, the implied volatility has been higher than historical volatility, except in time of crisis. Also, and so that's why there's a lot of people that believe that selling option is the best way to make money with option, because since the volatility is a very important factor in the price of an option, if the implied volatility is superior to the historic volatility, it means that the options are overpriced, and since the price including the risk, selling options should be normally the best way to make money consistently selling with option. The risk with that is that when you sell option, your gain is limited, but your potential, your loss, is unlimited. Hence, it's really important to have a very good understanding of option and option strategy, as well as hedging, to be able to sell option, because otherwise you're gonna win small amount of money every time, but once every few time you're gonna have you're gonna lose a lot of money with that if you don't if you sell naked options. So therefore it's always important to have a good hedging strategy when you're selling option, when you're trading with option, to understand and to be able to have a good hedging strategy, because otherwise you're taking huge risk for potentially smaller reward, and we know that that's not the proper way. That's not how you gain money with trading. You gain money with trading when you're able to do to take small risk and have big reward. And that's the goal of basically every trader or every market participant, to have the best reward for the lowest risk. So yeah, my scenario actually happened. I'm a bit disappointed that I didn't took it, but actually I know that that's actually a good thing, because my trading rules say I don't trade in the first 10-15 minutes after the open, and now the open was clearly not and that was clearly not the plan, and so since my scenario started during my the opening, I would have bought it here, put my stop loss somewhere here, and my take profit somewhere around here. So yeah, so far we're gonna wait until the upward move is finished and try to take the return. So far it's clearly still on. The move is clearly still continuing. If you look, we are like clearly inside the, yes, as I said that, it shows a sign of weakening. Also, while we're here, let me show you a beautiful like double top, because I've had this discussion with several of my students, and they and I've had trouble finding them like proper like double top. Well, here you have a really nice one. And this, if you look, we can see the neckline here, the pullback there, and then it went all the way down. So that was actually a pretty good double top. So that was like a pretty good double top. So you could either sell here and try to focus and be watching the price somewhere around here. Otherwise, you could play like the breakout of this support, play and buy on the pullback that happened like in the next 2 minutes somewhere here, and then take all this downside and probably exit somewhere here when the market started to slow down, because you already had made like a big enough amount of money. Otherwise, lately I had like some not bad day, but not really good day in my trading. Like I didn't have like a really good. I didn't have like a losing day. But I had like a day where I didn't win a lot of money, because I had actually some trade loss in like losing trade, and my winning trade was good enough to compensate for those losses, but not enough to have like a really good trading day. Like if I show you here, we can see I had like for example, this one I only had one trade, but like those 2 days I had like basically I did a lot of trade, and I only got like a small amount. So I can't say I'm really happy with my trading lately. It's not like dramatic, it's not really bad, but it's not as good as I would want it to be. So it seems that the market is starting to stabilize, or actually kind of going to start to come back down. As we can see here, it's like you see it went up, it rebounded around this price, which is TAC 21. If we go back here, it rebounded here. Yeah, here it went here, and then it started to come back, and it's now actually at the bottom of the and now it's breaking out. It's probably breaking out to go down. Let me say that. So that is going up. Also, lately I've had trouble by being patient enough. So that's one of my main axis of progress in lately. So that's on that I'm working currently, because I didn't want to wait. Like most of the time, I don't want to wait for the for my confirmation, because I've missed several market move, and I've been pretty upset by it. Therefore, I did the opposite the other time, the other time, and it showed me that. And so since I haven't been waiting for the confirmation of my moves, most of the I had like I said, showed you a bit of losing trade that slowly but took parts of my PNL, which was pretty annoying for me, as you can expect. So like I said, now I'm being patient, cautious, and waiting for confirmation before I enter a trade. because that's what people that's what's important in trading, is to be patient and cautious. So yeah, like like I said, you see, I said the market was turning down and now it's going back up. You can see the also, that's why it's important to be patient, because like I said, everybody is wrong, like sometimes is wrong. That's what basically every trading person should teach you, because like people online will say to you they have like 90% let's say 90% trading success, the 100 my new 100% trading strategy and stuff, but while those people are lying to try and sell you formation, to try and get you to unback with their broker who is paying them to send customer this way, so they can like make money. They also increase the spread, and then afterward give some of the spread to person like that are like sending the customer to them. Like we actually have some brokers that come to us with those type of proposal, but we systematically turn them down, because this is for us, this is like stealing money from either or like a student, or and that's not and that would be dishonest, and that's not who we are. But like if you looked at Hassan phone, like the Paris Academy phone. So yeah, I'm now looking at the market. We can checking the price at which we're going up. Like here we see each impulsion is going slightly upward, but we still have like yes, now it's not. Like it's going back down and now it's falling, as expected. You can see it should be getting this one up. It pushed it, get it back. So now the market is turning around, so that's quite a good sign. But also, like if you look at the candle, they're not like, well, this one maybe a bit, but we can see there's still like a lot of action. Yeah, up it got taken, up it's going back up. So you see like candle that are like that have small body and big wick are not necessarily what interests us, because it means that the market is uncertain in its direction and the way it's moving. So we're not necessarily it's not something we will like to trade. Like those one here, for example, like are stinky weak to like candle to trade. Like this one here exactly. This one is probably it's probably a bit better, but still you can see it's not like very common. No, it's gonna break out and it's not nice. And if we look at the S&P, we can see we're still in the middle of the value area, so or the bell as we call it. So yeah, we're not necessarily, it's not really a market that we like so far. So back, we are basically waiting. Also, it's pretty hard to focus on order book while talking. So this is also one of the reasons why my latest live won't necessarily like the best one, my best trading days. So yeah, if you look at if you listen at I'm actually, as I said, listening to CNBC in the same time as I'm trading to see what they're talking about, and they say that basically now the market is pricing the fact that the Fed's gonna stop, and they tend to disagree with that reading. So yeah, now the market's going down. We wait, we need to see how it's behaving at 15,560 because this was our original trade. So as we said, we wanted to be patient, not take it the first time. So we're gonna need to see how we're like behaving around this level. See if we're like rebounding or if not. If we are, we might, if we're breaking 160, 560, 15,560, we would probably like not buy it and wait. But at the opposite, if we bounce back, yeah, okay. Yeah, we're gonna wait and see what's the market's, how the market's moving. And it might seem like the market is not going down, but if you look at a longer time frame, we can see that we are still in the same upward trend, actually, since this morning. And so it's not necessarily like a sign that we should short it. Like we were pretty high inside the upward channel, but we're still not. We're still like it's still a bullish market and a bullish trend on the. If we look at the 5 minutes, yeah, we can see that we still have like from even here, we're still going up. Like we still have like a mini trend line that shows us that we are still like going up. So yeah, my trade plan was a bit pessimistic, thinking it would come back up until here. It didn't. It bounced back here, but it will happen. It happened. It's not that bad. Just gonna wait and see. Market is the only way. Market is always giving new opportunity to make money. So it's not because we miss one that we have to be only be trying to try to run after, because when we do that, most of the time it means we're trading with our emotion, and emotion are clearly not a good deciding factor in trading. It's actually quite the opposite. So it's pretty important to not let our emotion decide of our trading for us. So yeah, we've been live for 40 minutes. We can see that still the market seems to be wanting to go up, and to consider that once the July hike by the Fed is finished, they will most likely either pause or start to go back the other way. If we look at the investing or the CME, where is it? Tools, Fed rate monitor, we can see once it's gonna load. it's not loading very good. So if we look at the Fed barometer, we can see that for July, 94% of investors think they're gonna rake height, but for September, 80% of investors think they're gonna pause their hike, and same about September, November, and December as well. So let's just say the investors are so far pretty optimistic that this is the end of the hiking cycle of the Fed. How to say it? Like of the Fed, hawkish policy. I don't want to be either pessimistic or optimistic, because actually my opinion doesn't really matter, to be fair, because like I've repeated to my previous student that I had that we had last week, basically opinion only is only committing for the person listening to it. That's why also if you look on news and if you look at news and at analysis online, they're very often wrong, and there are several reasons for that. But one of the main reasons is that basically there's a conflict of interest. People sometimes often are wrong. Life is not as giving an opinion. The only person that don't make mistakes are the person that don't say anything or don't take any risk. And we know that and giving an opinion on market situation or market sentiment is there's always a high probability of being wrong. So that's why you should not. I don't say that they're always wrong, but that you should always double check, compare, verify, and make your own analysis on what you're reading online, especially investing news. But that works for most of the news in general. If you look at only one news channel or news, read only one newspaper, or only look at the news with only your own opinions, you're gonna have a biased vision of the subject, because you will only see you will have several bias, but the most important one would be a confirmation bias. And either in investing or in life, confirmation bias is the best way to just be wrong. So we are still waiting to see, is it giving us something or is it not? It doesn't necessarily seem like it's gonna give us something, not in the immediate, not soon anyway. And we only have 15 minutes left of the live, because afterward I have meeting with one of our I have a call with one of our online students. So yeah, we're gonna wait those 15 minutes and see if the market gives us something that we want to take, and if not, then we are just gonna wait and then end the stream without taking a trade. Still better than taking a bad one. And so far, yeah, I would have had probably a bad one if I took them, so I'm glad I didn't. And so that's why also it's important to be patient and to wait to have the confirmation of your analysis before entering trade, because if you don't, you're gonna end up backward, you're gonna end up losing money, and I don't make money than losing it. We can see we're still on our upward trend. We still have some margin, we're still going up slowly but surely, so we're not, we're still basically waiting, because thanks FR Red. Really, I agree with you. It's amazing live trading, especially when I don't trade. But yeah, I try to do my best. Like I say, my trading is as I can, as it can be. And yeah. And now it's going back up. So like we say, mostly that's what you don't see online when you look at YouTube videos or stuff like that. It's that basically most of trading is actually just looking at the market, trying to analyze it, understand it, and then decide what you want to do with it. So yeah. S&P, je suis à combien? It's 400 ATP. Let's see. I don't really know if I can because it's I'm trying to look because we're using yeah, but like auto is depending on your internet connection. I'm gonna see. We're using Restream and yeah, we've got 700 ATP, but I'm trying to see like for next time if we can increase the quality for. We'll try to see because actually I don't really know. I'm not an expert in streaming. So I don't really know. Maybe like that. Yeah, maybe next time. Next time, normally it should be better. I think I found the settings. And next time I should be in 180p, on 1080p, so it should be better. Like since like I said, trading is gonna end. My life is gonna end pretty soon without taking a trade because if the market doesn't want to give it to me, I'm not gonna force it. I've done it before and it turned out pretty bad. So I'm not gonna do it because it's better not to take trade that stinks. Yeah, it's like you've got in option you've got 720p and next time it should be like in 1080. Like it was a problem on my side of my backend side, and normally next time it should be better. Like ooh, actually it might actually even be yeah, next time should be like so far not really. I didn't today because the open was I wasn't like the open the move I wanted to make was not there at the happened just at the open, and actually I'm waiting to see if the market's coming back to give it to me, and so far it seems to slowly be coming back, so I don't want to force it. Like because lately I've been forcing it in live because I wanted to absolutely to enter in trade, to enter in live in trade during the live, and mostly I've ended up losing money, and so that had pissed me off more than just like talking for 1 hour continuously. So yeah, like I said, basically we want to wait, see what happen, like if we're coming back around those price and what happen around there, and if we are going So yeah, we wanna wait to see what happens around there. So yeah, somewhere around here, like with those two guys. And if we break it, we will wait because we have like other plan somewhere around here where we think it might bounce back there, go up, and if not, we would probably take a short then. But so far, like my most likely scenario for today is that it bounce back somewhere around here and go back up until there. Basically, that's my daily plan, my plan for the day. Also, if we look at the S&P, we can see that basically we're bouncing back, like we're coming back, so we might end up going to catch me. Let's see, like we're coming slowly, but yeah, it's coming. So we might actually enter a trade pretty soon. But it's not necessarily, it's not a certainty because, like I say, I have a call to make at 4:45, 4:40. So we'll have to end the live before. And if I make a call, I'm not having I'm not taking position while I'm having a call with one student because I then wouldn't be focused on what we need to see with the student. And yeah, I'd rather just spend the day talking about monetary policy. Yeah, sorry about that. About monetary policy and what's happening, how the economy is going. Well, because to prepare for this live, I've actually read the Beige Book and the monthly report by OPEP, which both of them are pretty painful PDF documents. Yeah, actually. And yeah, also I need to be being focused on both markets at the same time. It's pretty annoying and pretty difficult because, for example, I could have had one trade coming on the S&P that I had planned, but that I would have missed. Now tomorrow is national holiday in France, so I'm not trading tomorrow, but next week I will be trading. Next week I'm trading live, and the week after, basically every Thursday, except every Thursday I'm trading in English for Dubai Trading Academy and live, and on Friday in English, and on Friday I'm trading for I'm doing a live trading in French. They always live always start at 15:30, but I start the live 15 minutes before, so to let people the time to come. Even though it's not necessarily always time, and it's generally for 1 hour, sometimes a bit more, sometimes a bit less. It depends on how I'm I'm feeling. So yeah. Voilà, data, on est par là. So we can also see if we look at the market that there's currently a pretty strong battle between buyers and sellers, where the sellers are trying to warning, like it should soon end up, but the way we can see here, this is like the market is way too balanced, with buyer and sellers not really really one taking over the other. I'm seeing that to force it to move. You feel it, and therefore like it's not like a really good time. Like it's not the trading we like. We want a clear, straight, direct, like a clear directional move, not like balanced, like up and down. It's not necessarily like it's not really what we want. We want like a clear directional move. So yeah, I think I'm gonna end the stream. I think I'm gonna end the stream now. See you like next week if you are English speaker. Tomorrow if you want to catch me trading in French. Normally at one point I will. It should be better. Like I should enter the market then. Thank you for everyone that was there and that listened to me speak about monetary policy and economic outlook. And see you tomorrow and next week.